I mean, I do think that we will still have bear markets. I'm not sort of like sensationalist in the sense of like, oh, we're never going to drop by 80% again. I think we will. Like, I think we will drop by 80% again.
We definitely agree there. Hey, everybody. Today, I'm joined by Benjamin Cowen. You guys know I mentioned him a good bit on the channel. He's known for his lengthening cycles and diminishing returns theories based on some data science. We're going to take a look at those charts here in a second. You guys could do us a favor. Make sure to go down in the video description. We'll have Benjamin's link down below. You guys can make sure to subscribe to his channel. So Benjamin, how are you doing today?
I'm doing great, and I appreciate you having me on. I'm looking forward to showing some charts.
Yeah, absolutely. Well, let's go and get started. A lengthening cycle. A lot of people love that idea because it means that, the price will go up for longer. So if you could kind of show us what you got on that. People know I don't believe in that. So we'll see what the science says.
Yeah. And hey, I sort of draw these dubious speculations and sort of admit that, I don't really fully know what's going to happen, but I just take it one step at a time. So this chart, I showed on your channel back in March, and what it shows is the total cryptocurrency market capitalization. So rather than just showing Bitcoin, let's just show everything. And the red line is sort of like a fair value fit, okay? And the whole idea is we go through periods of undervaluation and overvaluation, right? And it looks something like this. This is sort of what I look at when I look at this chart. And I say, all right, we're currently in cycle 4. This is cycle 1 over here, cycle 2, cycle 3, and then the current one we're in, cycle 4. And what I said back, earlier this year was it looks like we're heading into a double peak type cycle where we have not one peak, but 2 peaks. And fortunately for us, we've actually seen a cycle like this before. For instance, the cycle over here, it was in fact a double peak cycle where the first peak actually happened around the same time that this one happened in the year. And then it had a secondary peak later on in the year, right? And so that would imply that we should be able to ultimately make another move to the upside. And before we had this first peak, we talked about what is the, were we too far ahead of schedule, right? That was the whole idea back then. And wondering, do we need to come back down, sort of, reassess, get the confidence we need to head back up. And just I took a screenshot from the video so that people know like where we were. This is what I showed back in March. Okay. And this is the chart we had. And I said, all right, I think what's going to happen is we're going to come up like this, we'll come down, and then we'll ultimately go up for a second leg later on. And this is what's happened so far, right? We ended up coming up, we sort of peaked in April, May. Obviously, it's a little bit fluid because, again, it's not just Bitcoin, right? It's the entire cryptocurrency asset class. So you sort of had one peak, and then you sort of had a second peak. And came back down. Now we're at a pretty critical point, and if you look, we're sort of went to the same spot that we went back in 2013 as well. And if you look at 2013, it sort of came up, and then it rolled over a little, and then it shot up, right? So we came up, and we're sort of rolling over a little bit right now. So my thinking is I do believe we will ultimately reach our sort of macro downtrend line here, which represents the percent overvaluation from the fair value logarithmic regression trend line. So that's what it's representing, is the overvaluation shifted by 100%. So what I would like to see happen is us ultimately make a run for the, for this sort of trend line that's showing us, okay, we are getting diminishing returns, diminished extension from the fair value. Back in earlier in the year, one of the reasons why I thought this is something we needed to happen is because look, we looked at the market cycle ROI from the bottom, we were ahead of schedule. Now we're no longer ahead of schedule, right? It seems like, all right, we're now below the prior cycle's ROI. It seems like we could have clear skies ahead, theoretically speaking, now that we're no longer, tracing the prior cycle. And then a lot of people prefer to measure from the halving, right? And say, all right, well, over here, we were also, quote unquote, ahead of schedule. And now we are back under it. And so the whole idea when you look at these two charts is, what do you notice, right? The first cycle was only a few hundred days. The second cycle was like 700 days. The third cycle was over 1,000 days. Therefore, it stands to reason, in my mind anyways, that what if this cycle isn't just, 1100 days or something as measured from say like bottom to top? What if it in fact extends out and just sort of continues this trend of the cycles getting longer? And then if you look at it from the halving, as measured from the halving, they've also gotten longer as well, right? The first cycle is the red line, took about 360 days or so. The second cycle took a little over 500 days. And so the thesis is just, well, again, it's very dubious because you're only extrapolating from 2 or 3 data points, but that's all we have. And if we had more, then it probably wouldn't be as fun of a discussion to have. So the whole idea is, well, what if this one goes maybe a couple hundred days beyond, right? What happened last time? So that's to say, it's not that we can't have a market cycle peak, like say this fall. Like I will say it's certainly possible, but I think people should have an open mind. And let's say we're not trading at 100K by the end of the year. There's still a good chance we could make it there as we head into maybe next year, right? That's sort of the idea.
Yeah. Now, what do you think about? I want to touch on a few points here, but so what do you think about a bear market? Do you think ultimately we'll see a standard bear market that we're used to seeing, or will the fact if the cycles are in fact getting longer, the bear market within that would be smaller to kind of compensate for that? Does that make sense?
Yeah, I mean, I do think that we will still have bear markets. I'm not sort of like sensationalist in the sense of like, oh, we're never going to drop by 80% again. I think we will. Like, I think we will drop by 80% again.
We definitely agree there.
Yeah, I don't think that the 80% drop or the 85% drop. I don't think it's from 64K though. Like, I think we had a 55% drop, and could we go lower than that before heading higher? It's certainly possible, but I don't think that this is I don't think we're going to go say 3 years without putting in a new all-time high. Okay. So I think we both agree on Bitcoin should be able to generally trend up with time. I think the main thing is, okay, is it going to happen this year, or is it going to happen next year? Or could it be a combination of both? Right? And maybe we'll trend up in Q4 and then go even, go a little bit further into 2022 as well. So we'll have to, we'll ultimately have to wait and see. So yeah, I mean, I do think we will have bear markets in the future. It'll probably last a year or so, maybe more. And then what we really like to do with Bitcoin is we have these long accumulation phases, right? Where we just don't do much of anything, but go sideways within like a certain range or something.
Yeah. Now, when we're looking here at 2013, as you said yourself, that this is one that we kind of are looking at, and we could be seeing the same scenario, a double top, as you mentioned, or double bubble, as some people have called it. The thing that I notice when I look at that is the fact that we have, if we're looking at where we're at now, we just had this dump in the middle of this market. So maybe it was the next one after that. Yeah, there you go. I mean, the dump that we just had in May, it looks very similar, in my opinion, to what we saw at the bottom of the market in between those two bull run, or the two parts of the bull run in 2013. To me, if I'm looking at that chart and I'm looking at the second bull run, it seems like once it started going, it went straight parabolic in the air. And that's kind of what I'm seeing, what I expect to happen. What are your thoughts on that?
Yeah, I think that's a great point. And I think that's why we need to be, that's why I'm certainly flexible on lengthening cycles, right? Like this is what I think is going to happen. And then there's what actually happens in Q4. Now, to address that point specifically, the first thing we should note is that the first leg and the second leg of the cycle, they had a pretty similar slope, right? Like they both went up almost vertically. But if you actually compare, say, like the angle of attack for maybe the aerospace engineers, like the angle of attack on say this one and then this one to this one over here, this one is not as steep. Okay, so if the second leg of this cycle were to even emulate this leg, which would actually be a very bullish scenario, and I could get on board with for sure. I feel like it would already take it past 2021, because like this move here that made like that move lasted like 6 months. It was from like October until April, right? Before we really started to calm back down. So that's sort of what I'm looking at. But here's another interesting perspective. I'm glad you asked this question, because I actually have a chart specifically addressing it. And it's this one here. Okay, so if we look at we can look at a ratio between the first peak here and the intermediate peak of the next cycle, right? So first peak, intermediate peak, first peak, intermediate peak. What you'll notice is the time from this first peak to the intermediate peak over here was 672 days. And then the time period between between this first peak and then the second peak of that cycle was only 235, okay? But then this cycle, it's been 1,200 days from this peak over here to the first intermediate peak of this cycle. So if we were to do a little bit of dubious speculation and took the ratio, we said, all right, 672 over 1211 equals 235 over X, and we solve for X, what it would imply is that the next leg would actually only take around 432 days from this point. So if it does end up taking 432 days, rather than say 235, if it's the exact carbon copy, if it takes 432, it'll put the cycle peak out in the summer of 2022. Yeah. Okay, so that's the idea. I get what you're saying. Like, okay, if we just shoot up in Q4 like we did over here, certainly a possibility. If it happens, we'll certainly keep an eye on it if we go back up to these valuations over here. Alternatively, we could also look at, say, these ratios between time, because one of the things you'll notice between this cycle over here and then this one, the current one is like a stretched out version of it, right? Like the time between all these milestones has taken longer to reach. And so if it's like a stretched out version, it sort of tells us what might happen, but it took us longer to do everything. Like look at the 2019 move. I'm sure you remember the 2019 move on 14K. But like, look how long that one took compared to the similar move back in 2011. Like the one in 2011 was like almost immediate and then back down. This one, it took place over like a year, right? It slowly went up and then it slowly went down. So the idea is it's been stretched out a lot.
Yeah. Well, I think what it boils down to here is everything you're saying, makes perfect sense from a data perspective, from the chart perspective. But my argument being more of a fundamental person or fundamental analyst, if you will, is looking at the chessboard in the world right now in economics and how, in my opinion, we are shaping up to change towards deflation. It'll be a black swan event towards the end of this year. It's going to wreck a lot of different markets. We're seeing a lot of moving pieces going on right now with the stuff that just happened in China, for instance, with Evergrande, with China banning speculative real estate investments from their citizens, which is really crazy. We're seeing the bond yields go down. We're seeing tapering, which should be starting around November. To me, it looks like we are heading towards a recession in the United States towards the end of this year. Do you have any thoughts on kind of the economic situation in the world and how that could affect the charts? Or do you only look at the chart specifically?
No, I mean, I do look at fundamentals, and I agree. Like we're probably all markets are overheated. I mean, crypto's overheated. I mean, well, a year ago, the prices were 1/10 of what they are today, right? The stock market's been going up for basically a year, but I also think it's really hard. Like everyone, we all like to. I would love to be able to know when, say, the next recession is going to start, because I would love to just cash out everything and go to safety. And if you think back to March of 2020, a lot of really popular analysts that follow the stock market were all calling for a recession or a Great Depression back then when we dropped 40%. Right. But they were all wrong, right? Like we've been going up for the last 18 months. And so I would agree that eventually, things are going to start they'll come tumbling back down. Will it happen in the next 3 months? I don't know. I mean, like that. I mean, I guess that's up for anyone to speculate on. I would say, it's certainly possible that the stock market can have these corrections, right? We're currently in a stock market correction right now. But it doesn't necessarily mean we're going to have, say, like a 40% correction. Like a 40% correction in the stock market, like we saw last year, they don't happen every single year, right? They take, there's a lot of time between them. But also, I would like to say, from a fundamental perspective, one of the reasons why I think this cycle is going to lengthen is because we actually have a lot more utility this cycle. Last cycle, what was our utility? Oh, if you had a middle school education, you could go print an ERC20 token and market it as like the next best thing. You launch a WordPress site and say, hey guys, we're gonna have this crazy thing. We're gonna raise, $10 billion.
We're solving all the problems.
Right, exactly. Yeah. But this time, what do we have? We have institutions coming in. We have DeFi. We have a centralized finance. We have the NFT space. I'm not saying that like these types of utility things or this type of utility is ultimately going to drive us to $1 million per Bitcoin. I don't think it will. but there at least is more utility today than there was back in 2017, and there was more utility back in 2017 than there was in 2013, right. Which you could argue from a fundamental reason is maybe why they lasted longer in the past is because there was more to speculate on.
Yeah, and we're speculate on it, and I think obviously just awareness, it keeps it in the public eye more. And when you're having, more utility, especially with the NFT and DeFi stuff going on right now, I think that does raise awareness and can keep the spotlight on it a little bit longer. I think everything you say makes sense. I mean, if I were looking at this in a vacuum, I would agree with you on everything. My opinion is I do believe, and you're right. I mean, people have been predicting, recession for a long time. A lot of people have not been predicting deflation. There's been this idea in crypto that quantitative easing is going to continue for the rest of history and the financial house of cards is just going to collapse, but our government's smarter than that. And by smarter than that, I mean, they're more power hungry than that, and they're going to stay in control and they're going to stay in power. And if our financial system does collapse, they're going to lose that, and we're going to lose the reserve currency. So I think they're going to do something, with the deflation to make the dollar stronger, and that's how we're going to keep the Federal Reserve status, or the world reserve currency is what I mean there. So, but I think it all makes sense. I think that your charts are amazing. I really like this valuation versus trend line here. I mean, I think that's a great one to look at. So Benjamin, what's your final thought on this market?
I think some of these things we talk about are okay. Is it a 4-year cycle? Are we going to peak in, are we going to peak in a couple of months? Are we going to peak in a year? No, really, the truth is no one fully knows, right? No one fully knows what's going to happen. One of the things we can do is manage our risk accordingly. And I've watched some of your videos where you encourage people to take profits. And I think that's a great thing. Taking profits is not a bad thing. And everyone has their own risk. And to some degree, hodling is a meme. If you're in your 20s and you're investing, you're gonna want to take on more risk than if you're in your 60s, right? I mean, like if someone's older, they might not care if they miss the next leg, right? They might just want to get out while they still have profit and whatnot, rather than betting on say what may or may not happen. So the last thing is looking at stuff like this and modern portfolio theory and whatnot. This is some of the stuff I use. So just try to figure out, hey, what are portfolio weights that you could have to navigate the cycle regardless of what happens? And one of the things that I think everyone could agree on is that Bitcoin is probably the safest in terms of minimizing your downside risk for crypto, right? Like for
sure,
crypto.
I agree.
Yeah. So, and that's what modern portfolio theory tells us, right? It tells us that, out of all the cryptocurrencies out there, if you look at the ones that have been around for a while, so we have enough history to actually understand what's going on, it says the majority of the portfolio should be Bitcoin because you have the upside potential and it also minimizes your downside risk. It doesn't mean you can't speculate on other things, but it's certainly a good way to go. And I think that people need to just basically manage their risk accordingly. And we'll try to do our best to try to figure out where we are in the cycle. But at the end of the day, we're just guessing, right? We're just guessing, and hopefully they're educated guesses and hopefully get it somewhat close. But none of us are going to predict it to the day or the dollar.
Yeah, I mean, I definitely agree with you there. I think what you said about portfolio is very important. I mean, even as a creator on my channel, as we've gotten to be a bigger and more influential channel, we cover less and less small projects. We tend to focus on the biggest ones because we know it's the safest, and we do want people to take profits, but we always want people to, be a little more conservative. But like you said, if you're in your 20s and you're just trying to get it to where, maybe you can, live the kind of lifestyle you want down the road, then it's okay to do a little bit more risk as long as you can afford to lose it. And then when you win those, you roll that into the bigger coins. And that's kind of the way to really build a good portfolio.
Yeah, like a 20-year-old could say, you know what, they don't care about the next bear market. They're just going to ride through it and wait till the following one. Whereas if you're 70 years old, you might not want to do that. Absolutely.
Well, Benjamin, thank you so much for joining us today. I think this has been very helpful. I think our audience is going to get a lot out of it. Don't forget to go subscribe to Benjamin's channel. Let us know what you think about this down below in the comments. That's all I got. Be blessed. Good boy out.